Right now, something massive could be brewing in the Pi Network price charts. After weeks of corrections and sideways movement, all eyes are glued to one thing, the 74 cents level. Why? Because if Pi reclaims it, we could be staring at a powerful bullish reversal. One that might take us right back to 85 cents or even that previous swing high near 99 cents. That's right, the signs are lining up. Oversold RSI, declining volume at support, and textbook technical confluence. This isn't just noise. This could be the calm before the next Pi storm. But wait, here's where it gets even juicier. We're not just talking about a possible bounce, we're talking about a potential full-blown price rotation, from 70 cents support to 99 cents resistance, if the right catalysts fall into place. And if you've been following Pi Network for a while, you know this isn't our first rodeo with this kind of setup. So, let me ask you this. Do you believe Pi Network is gearing up for its next impulsive move? Or are we headed for more pain before the gain? Drop your answer in the comments, and don't forget to check out my previous videos, links in the description, to catch up on the latest Pi Network developments, from mainnet milestones to ecosystem shifts. Also type Pi Network to the moon and shout out your country in the comments. Let's see where all the Pi believers are watching from around the world. If you're new here or just loving the Pi content, smash that like button, share this with your fellow pioneers, and hit that subscribe button so we can keep bringing you solid, research-backed Pi Network updates. And hey, don't forget to join our growing Telegram community and Facebook page, links down below. And remember, this video is just for entertainment and educational purposes only. It's not financial advice of any kind. Let's dive in. The recent journey of Pi Network's price action has been nothing short of a roller coaster. After a strong bullish run that had everyone buzzing, the market took a breath, pulling back, cooling off, and entering a corrective phase. But here's where it gets really interesting. Despite the downward trend, the structure of this correction is very much intact and healthy, especially considering the strength of the run that came before it. Right now we're sitting in a tight zone, framed between a swing low around 66 cents and a recent swing high touching 99 cents. This isn't just any price range. This is the playground where accumulation is likely happening quietly in the background. It's like that moment in a game where everything slows down before the big move. The pressure is building and the market seems to be coiling like a spring, waiting for that one trigger to explode upward. Let's break it down. And trust me, this is where it gets juicy. Pi's price has been pushing against a descending trend line. Think of it like a ceiling that keeps knocking the price back down. But here's the thing. Every rejection is forming a tighter and tighter range. This structure is known as an apex in the trading world, and it usually leads to one thing, a powerful breakout. This entire price compression is happening right above a critical support zone near 69 cents to 70 cents. And this zone? It's no random floor. It's aligned with the golden 0.618 Fibonacci retracement level from the recent rally, a favorite among technical traders when spotting potential bounce areas. But that's not all. This same price zone also lines up with VWAP support, historical volume spikes, and it's sitting right at the value area low, a region where big players often step in. What does all this mean? It means this level is loaded with confluence. It's the kind of area where bulls and bears have their showdown, and right now the bulls seem to be silently building strength. Even more telling is the volume. You might look at it and think, nothing's happening. But that's the point. When volume drops off as price hits support, it's often a signal that sellers are running out of steam. They've pushed all they could and now they're fading. What usually comes next? A surprise burst of buy orders that flips the market back upward in a heartbeat. Now, one of the biggest clues we have comes from the RSI, the Relative Strength Index. It's creeping toward that magical 30 mark. If you've been watching Pi's price for a while, you know what happens when RSI dips into oversold territory. Fireworks. The last few times RSI hit these levels, we saw price rip upward, sometimes quickly pushing back toward the 70-90 RSI zone. That kind of snapback move has been part of Pi Network's DNA during past cycles, and we could be close to seeing it again. So, what's the critical level to watch? It's 74 cents. The point of control, or POC. That's the midpoint of the current volume range, and it acts like a magnet for price when things start to reverse. If Pi reclaims that level with conviction, especially on rising volume, it would be a loud and clear signal that demand has returned, and we could be off to the races. From there, the roadmap becomes clearer. Reclaim 74 cents, push toward 85 cents, the value area high, and then retest that sweet 99-cent swing high. That move would complete what traders call a full rotation within the volume range. And if history is any guide, these full rotations tend to happen quickly once the reversal is confirmed. Now let's talk about the setup in terms of risk. The downside right now seems pretty well contained above 66 cents. That's our swing low, and unless price breaks that level with heavy volume and fails a bullish retest, the structure stays valid. This is a textbook case of a bullish pullback in a larger uptrend, not a crash, not a collapse, just a necessary cool down before the next leg higher. What makes this moment so compelling is the rare alignment of signals. From Fibonacci support and oversold RSI to low-volume exhaustion and a coiling price pattern. These setups don't come often, and when they do, traders notice. Add to that Pi Network's shift to its open mainnet, and we're no longer in the testnet phase. This is the real deal. And with that change comes new price behavior, more real market dynamics and higher stakes. So while the chart is telling one story, the fundamentals are slowly catching up, and that could be the fuel behind the next rally. Still, no setup is guaranteed. If the support at 69 cents breaks down hard and fails to reclaim 74 cents, we'll need to reassess. That would invalidate the bullish bias and suggest a deeper pullback could be in play. But until that happens, the smart money is watching this range like a hawk. Because more often than not, these kinds of consolidations resolve in the direction of the prevailing trend. And right now, that's still up. So, what should we expect over the coming days or weeks? The key is watching for volume. If we start seeing a surge of trading activity while Pi reclaims 74 cents, that's our signal. The reversal is likely on, and the next targets become 85 cents and 99 cents. These levels aren't just random numbers. They represent liquidity zones where the market has previously reacted and where it's likely to react again. The market thrives on emotions, fear and greed, and right now fear has cooled off, but greed hasn't kicked in yet. When it does, and if these technical signals align with a strong breakout, Pi could deliver one of its signature impulse moves. And if that happens, you'll want to be on the right side of the trade. So to wrap it all up, Pi Network's price is coiling at a critical support level with all the ingredients in place for a bullish reversal. We've got oversold RSI, major Fibonacci support, declining volume at the base, and a potential apex breakout on deck. If we reclaim 74 cents and volume confirms it, expect a fast move toward 85 cents and possibly even a retest of 99 cents. If you've enjoyed this deep dive and want more content like this, don't forget to like, share, and subscribe. That's the best way to support our work and help us keep bringing you top-tier Pi Network updates. Now here's a question for you. Do you think Pi will reclaim 74 cents and launch back to 99 cents, or is more downside still ahead? Drop your thoughts in the comments below. And if you've got any contributions or questions, don't hold back. I'm always reading and replying. Thanks for watching. And as always, see you in the next video.